Hey everyone, welcome back to Corporate Decoder. Today we're diving into a bit of a head scratcher from XOMA Royalty Corporation, a company that deals in royalty rights for pharmaceutical products. Apparently they needed to fix a typo that was tucked away in the fine print of their preferred stock documents. Sounds like a snooze fest, right? Well, sometimes even the smallest errors can tell a bigger story about how these big companies operate behind the scenes. Before we dig into the details, if you enjoy us cracking open these important corporate documents and finding the hidden gems, do us a favor and hit that subscribe button. And hey, we've got a fantastic community over on Discord where we break down these filings even further. You can find the link in the description below. Alright folks, let's talk about XOMA Royalty Corporation. So, on the 23rd of September 2025, they filed a document with the US Securities and Exchange Commission, or SEC, which is basically the watchdog for publicly traded companies. This particular filing is a Form 8K, which is used to report significant events that stakeholders should know about. Now, this report is tea about a new drug launch or a massive financial deal this time. It's actually about correcting a minor mistake in something called the Certificate of Designation for their 8.375% Series B cumulative perpetual preferred stock. So, what exactly did they have to correct? It turns out there was a small typo, a number that should have had a comma. We're talking about a number that went from supposedly being 1.253.13 to the correct 1253.13. Now, you might be thinking, who cares about a misplaced decimal or an extra period? But in the world of finance and legal documents, especially those dealing with preferred stock, precision is absolutely critical. These numbers often represent specific financial obligations, dividend amounts, or liquidation preferences. A small error could theoretically lead to confusion, disputes, or even unintended financial consequences, if not caught and corrected. This filing is essentially XOMA Royalty saying, oops, we made a tiny mistake in this legal paper that outlines the terms of a specific type of stock we issued, and here is the official fix. It is like finding a smudged word on a contract and then issuing an addendum to make sure everyone reads it correctly. The Certificate of Designation is a really important document because it lays out all the rules for that particular series of preferred stock, like how much it pays in dividends, when it can be redeemed by the company, and what happens if the company goes bust. Now, XOMA Royalty has a few different types of securities out there. They're common stock, which you might see traded under the ticker REXOMA on the Nasdaq global market, and then they have two types of preferred stock. There is the 8.625% series, a cumulative perpetual preferred stock, which trades as XOMAP. Also on Nasdaq. And then to raise the stock related to this filing, the 8.375% Series B Cumulative Perpetual Preferred Stock, which is represented by depository shares trading under the ticker XOMA on Nasdaq. Preferred stock is a bit of a hybrid, kind of like a bond and kind of like a stock. It usually pays a fixed dividend, and it has a higher claim on the company S assets than common stock, if things go south. So, this correction falls under item 5.03 of the 8K, which deals with amendments to the company S governing documents, like its articles of incorporation or bylaws. In this case, it is an amendment to the Certificate of Designation, which is a core document for their preferred stock. The fact that they're issuing a certificate of correction highlights the seriousness with which they're retreating even these minor paper trail issues. Under item 9.01 of the report, we see the exhibits. The most important exhibit here, labeled Exhibit 3.1, is the actual certificate of correction itself. This is the definitive document that rectifies the error. It also includes Exhibit 104, which is the cover page interactive data file, a standard document for SEC. Filings that helps with data analysis. But here's the real question. What does this tell us about XOMA Royalty? On the surface, it's just a typo correction. However, it can point to a few things. It could mean that the company has a very rigorous internal review process that caught this error before it caused any real problems. Or, conversely, it could suggest that perhaps the initial drafting or review process might have had a lapse. For a royalty company like XOMA, whose business heavily relies on the precise terms of contracts and agreements, especially related to their revenue streams from pharmaceutical partnerships, accuracy in all legal documentation is paramount. Any ambiguity or error in their stock designations could, in rare cases, have downstream impacts on how those securities are valued or managed. From a larger perspective, XOMA Royalty focuses on acquiring royalty interests in approved pharmaceutical products. Their investors are essentially betting on existing drugs generating revenue for years to come, and also on new drugs gaining approval and generating royalties. The stability and clarity of their capital structure, including how their preferred stock is defined, is important for investor confidence. A clean, error-free set of documents signals good governance and meticulous attention to detail, which is reassuring for anyone holding their stock, common or preferred. So while this specific filing might seem like a minor administrative detail, it's a good reminder that in the corporate world, the devil is truly in the details. Even the smallest errors, when corrected promptly, can help maintain the integrity of financial and legal structures. For XOMA Royalty, ensuring that all their documentation, from royalty agreements to stock designations, is spot on is crucial for their business model and for maintaining trust with their investors. Now, looking at these results more broadly, XOMA Royalty appears to be a company that is carefully managing its corporate paperwork. While there are no major financial numbers to dissect in this particular filing, the emphasis on correcting even a small clerical error in their preferred stock designation suggests a commitment to accuracy in their legal and financial reporting. It is these kinds of seemingly small actions that can build or erode investor confidence over time. Alright, that is our breakdown of XOMA Royalty S latest filing. What is your take on the importance of these meticulous corrections in corporate filings? Do you think it signals strong corporate governance or just standard procedure? Drop your thoughts in the comments below. If you found this analysis valuable and want more deep dives into corporate documents, hit that like button and subscribe for more. And don't forget to join our Discord community, linked in the description for more exclusive content and discussions. Thanks for watching, and we LL see you in the next episode of Corporate Decoder.